Hello, welcome back. In this video we're going to be talking about money management. We're on this lesson 14 right now on the basics of Forex. This is going to be a very brief video because I go into more detail on it on my money management members area, which you can purchase the spreadsheet that I have, and we'll go into a lot more detail about it, but things we'll be covering on it. The basics of money management is by far the more important part of your trading business. Without it, you'd be ruined. We are trading with leveraged accounts, which increases our exposure to risk. So you have to step up your game in business money management. Some of the basic money management principles to consider in your trading is to never risk any more than 3% on any trade, no matter whether you're a novice or a professional. That's a rule of thumb, no more than 3%. If you risk any more than 3%, it could be devastating to your account, especially if you have a losing streak of 20 trades or more. I'll show you that in a little second. Rule of thumb, but not a hard set rule, but always at least aim for a 2 to 1 profit to risk ratio. So for every 1 you risk, you're looking to gain 2 in profit. It's a rule of thumb, but it's not solid. It's not set in concrete, but it's a good guideline to stick to. Especially before you place a trade, you need to make sure that there's more profit potential in a move than you're actually risking. So for every 30 pips you risk, you're looking to gain 60. If you can't find that potential in the trade, do not trade it. With our trading, maximum risk of 30 pips at full leverage. That's my style. You can change that to how you want on the money management spreadsheet. I'll show you that in just a second. But if you do come into a situation where there is a move higher than 30 pips, let's just say 35 or 40, the key thing to do with that is half your leverage. If it's more than 30 pips, which halving your leverage also means halving your position size that you've already set. And also increase or decrease position size monthly according to the current balance. Now this is all to do with compounding the amount of money that's actually in your account. More of that in detail. That's quite a complex little area, that, so we go into more detail later on. But these are the basics you need to implement into your trading routine, and do not take these steps lightly. Not sticking to the rules will definitely break you as a trader. Just to whiz over to my money management members area, the few things we'll be covering is your broker leverage, explaining what that is. It's the first thing you'll see when you land on a broker's website. Also your equity leverage, having a little description about that. Your win-loss ratios, system win rates, compounding, and how much should you risk. We already talked about that, how to work it all out, and also minimizing risk, which is very important. There's more to come on that page. So this is my money management spreadsheet that you can purchase online. I've just got a few examples in here just so you can see how the chart works. We put our end of month balances in, your profit. This works it all out for you automatically. You put in your profit requirements here. Might be 10%, might be 20%, might be 5%. That's down to you. Another one here is at the end of the month we enter our total trades, your winning trades, losing trades, any break even, and this gives you a win rate of your system. Another very important one is your profit to loss ratio. So we put our average win in dollars, average loss in dollars, and this will automatically work it out for you what your profit to loss ratio is. Like we were talking about, 2 to 1 is a good key. If you had a 2 to 1 and a 50% win rate, you would be just breaking even pretty much. So the key is to, if your win rate goes down, you want your profit to loss ratio to be higher. How do you do that? You minimize your losses by trying to save a few pips every single trade. And anyway, you enter your statistics here month after month, and this will bring it up in the graph for you, just to show your trading performance. So for the purpose of this video, just to simplify things, we're going to be working off these numbers. We're going to have a current balance of $1,000. I'm going to trade at my full leverage at 10 to 1, so for every $1,000 in the account I'm trading with $10,000, which also equates to one mini lot. We're going to work with a 3% maximum risk per trade, and our account type is a mini, so we put in here number 1, and we don't need to know this just now, but the monthly profit requirement is 10%. So for this $1,000 at 10 to 1 leverage and risking 3% on a mini account, my trading style is 30 pips to 60 pips. You can enter your own numbers here depending on your trading style. If you want to put this one at 100, these formulas will automatically work out your position size. The risk per trade has already been worked out from the figures that you put in here. So if you want to decrease your leverage to 5, this will change it from £30 per trade to £15. But we'll change that back. So for $1,000 is a one full mini lot for 30 pips, and like I was telling you, if you find a trade that was more than 30 pips, you decrease your leverage by having your position size. So in this case, the maximum would be then 60 pips at half a position size, but you can still see that we're risking exactly the same amount in a dollar's profit. But that would mean if you were risking 60 pips, you would look to gain 120 pips potential. Okay, but we're going to go over to this one now. Based on these figures of a 3% loss on your account, so $30, each one of these is one individual trade. It's a fictitious trade. We're just doing up these numbers just for explanatory purposes. So in this case there was 20 losing trades and 10 winning trades. Now what that came out at, this was the total loss in dollars, $600, and this was the total gain in dollars, 600. So we broke even on that day, and the profit to loss ratio is 2 to 1. Now the system win rate is 33%, because 2/3 of your trades were losses and 1/3 was winners. But you can still see, because of the money management principles of going for the 2 to 1 profit to loss ratio, we managed to keep the account at a break even level. You didn't win, you didn't lose, you managed to protect it for another run. That's why money management is so important, because although it's very beneficial for when you're winning, it's absolutely necessary for protecting your account from losses. If you get your money management principles right, you can actually keep your account for a lot longer. Okay, especially if you're on a losing streak, if you have 20 losers in a go. Next example here, we're working on a 50% win rate, so equal amount of wins, equal amounts of losses. So we're still sticking with the 30 trades that we've done over here, but in this case we had 15 losers and 15 winners, both still at 3% loss and a 6% gain. It is still a 2 to 1 risk to reward ratio, 50% win rate, but the outcome of this is a total loss of $450 and a total win of $900. So as you can see, the account balance would have been plus 450 at the end of the month, even though you only won half the time and you had a profit to risk to reward ratio of 2 to 1. And in the next, we're still going to stick with the same analogy of a 50% win rate for your system. So same again, 15 trades were losers, 15 trades were losses. But in this aspect, we were risking 30 pips and looking to gain 60 pips. But in this case, we decided to minimise risk by waiting for a 5 pip pullback before we placed every trade. So what this actually does to the account at the end of it is the total losses have now reduced from $450 to now $375. The profits were still the same for that month, $900, but we can see 5 pips every single trade for these 15 trades. We managed to save $75. But the good part is what it actually does to your profit to loss ratio is we now have a 2.4 to 1 risk to reward ratio. So for every one that we risked, we actually gained 2.4 on every single trade. Now these numbers are very beneficial for you, the higher you can get. So it's very important to minimize risk and have your gains set at 2 to 1. You can see whether the rule of thumb of 2 to 1 really takes place, because you can win half the time and lose half the time. As long as you stick to these ratios of 2 to 1, your account can actually be profitable at the end of the month. So it's very important to pay attention to these. I would recommend going to the page and getting a hold of a spreadsheet. If you're literate with Excel spreadsheets, you can go ahead and knock one up yourself, but it took me a little bit of time to get all these right, getting all the formulas in, so why not just go to my page and purchase this. It's really quite a cheap price for what it's worth and the benefits it can bring to your trading business. So I know this is a very simple video that I just put together. Obviously there is a lot more detail on the specific web page for money management, because it is a very important subject on its own, and it needs a lot more explanation into everything that's going on. But for the purpose of the basics of the Forex markets, this is just a quick recap on it, and it's something that you should definitely look into implementing into your trading business. So that's all for now, and hopefully you'll go over to the money management software page, purchase a spreadsheet. I'll give you a good discount on it if you purchased the basics of the Forex market, which obviously you did because you're on this page, and we'll get a nice 50% off it for you. So okay, I'll see you on the next video anyway. Cheers for watching.